the stock market's red, but all I see is green. You see, when the market starts to drop, investors start to panic. Bob over there tells you, you should sell everything, get out while you still can. But here's the thing, Bob, he isn't rich. In fact, he's broke. So why should you take his advice? And even if he was wealthy, Bob may have a different system than you. Personally, I buy stocks on a regular basis. Every paycheck, my money is going out there to buy more shares. I have a very simple system. It's consistent and it works. But that's exactly why most people fail, because they don't use systems. They rely on emotion and fear rather than logic and consistency. You see, I don't care whether the stock market is up, down, or sideways. I'm going to buy every 2 weeks on my payday, no matter what happens. When you walk through a grocery store and you see stuff on sale, what do? You fill up your cart because it's a good deal. But when it comes to the stock market, people don't seem to apply the same principle. Stock market's red means that stocks are at a discount. I can buy more shares for the same amount of cash. And so that's why a red stock market is actually my lucky day. And it should be yours too if you have a simple and consistent investment strategy. I really don't think about where the market is very much. In fact, I barely check my portfolio. Every 2 weeks when I go in to hit that buy button is pretty much the only time I will see how my investments are doing. And even then, I don't spend much time thinking about it. Because you see, the less you think about it and the more you execute, the more likely you are to eventually reach your financial goals. People just need to stop being so emotional with money. Money is a tool. Buying assets is what you need to do to have the money you need to live the life that you ultimately want. Instead of looking at money like something that's needing to be spent, look at it as something that needs to go out and buy more assets to make you more money, no matter what the weather is. The point I'm trying to make here is that inevitably things will happen that will cause the market to sway. The stock market is naturally volatile, but over the long term, it goes up and to the right. And of course, I don't know what the future holds for the stock market. I don't have a crystal ball. I can't see into the future. But I'm making a bet by buying exchange-traded funds, which is essentially buying the entire stock market. In the future, the value of the market will be higher than it is today. The longer your time horizon is for your investments, the less risky investing is. So a lot of people think that buying stocks, buying shares, buying index funds is inherently risky. But I would argue that it's the least risky investment you can make, because over time, your investments should track upwards. Maybe not in year 1, maybe not in year 2, but on average, over a 10 plus year time horizon, you should see returns of between 8 to 10% on average. Those have been the historical returns. Again, I don't know the future, but I'd be willing to bet that the stock market will return a fairly similar rate over the next several decades. There's a quote I really love, and it goes like this: when others are greedy, be fearful. When others are fearful, be greedy. So in this case, the market's down. People are fearful. They're selling because they're afraid their shares are going to lose value. They want to capitalize on the current highs they're seeing right now. But when those people are fearful, I'm greedy. Although to be honest, I don't really care. Like I said before, I have a consistent schedule, so regardless of what others are doing, I'm just going to be continuously buying up the market. I don't have infinite cash to buy shares, but every paycheck, when I have another opportunity to inject my capital into the markets, I will do so. If you do have a bunch of cash sitting around, now might be a good time to invest it. Ultimately, I'm not a proponent of timing the market. I really do think that having a regular schedule is going to beat almost any sort of timing over the long term, and that's what I stick with. Consistency, patience, and detachment are the 3 keys to successful long-term investing. Don't worry about the noise on the news. It's not going to impact the stock market for the long term. Yes, it will cause short-term dips, but again, we want to zoom out and look at the big picture. The market, the stock supermarket, is currently on sale, and it's time to go out there and load up our carts. My name's Lucas, and I want to thank you so much for tuning in today. If you enjoyed this video, if you got a bit of value from it, make sure you hit that like button, share it with your buddies, and also subscribe so you won't miss a new piece of content from Earned Escape. See you in the next video. Cheers.